in a mutual fund, it works both ways. It works both ways. So in the sense of with your return, because I said you're only owning that small portion, your return is then also based on that small portion as well.
But at least it's still a way for people to get started.
Correct.
Okay. Next thing, let's talk about how mutual funds actually work. So usually it's managed by what is known as a fund manager.
Yes, correct.
Who has a team around him. So these are the guys that will go out and determine what assets or which company shares to buy, which bonds to buy, and the proportion of these. It's also important to know that each fund also has a different strategy. There's something that they're trying to achieve. So whether that, usually it's either they're trying to make income for you to receive as dividends,
correct,
monthly, or they're trying to achieve capital gains. So, or they can have a mixed strategy of these two. Yep. So that's how they then determine which company shares, assets to buy for this fund. It's just up to you to do your research and select the fund that you want to invest into based on its strategy and also probably based on its previous performance.
And also its fees.
Because
they said they charge a fee for managing this money on your behalf. Okay. So each mutual fund manager will charge different fees depending on past performance, etc. So you need to weigh up. That's another cost that you need to weigh up in your decision.
Okay. So let's actually concentrate then on the fees charges. So some funds, there's actually an initial investment fee for actually just putting your money into it. There's also a switching fee. A switching fee is whereby you want to move from one fund into another. Usually these fees are around 0 to 2%. They're increasingly getting lower because the industry is really competitive. So it's like the insurance market, like car insurance. There's so many options available, and therefore people are always constantly switching, and so premiums, you can get lower premiums.
Yeah.
So it's the same with this investment world. Depending on the funds that you go into, depends on the kind of fees you pay. There's also another one known as the annual management service charge, which is what you just pretty much touched on, which is where they get a slice of
it's kind of like a performance fee as well.
A performance fee, exactly. Almost like a commission for them
how well they managed the fund.
But they do receive this fee whether the fund performs. So that's one thing you have to be aware about. I know we've touched about the risks a little bit, but essentially the risk with investing in mutual funds is essentially kind of the same as investing in the shares of a company.
Correct.
In terms of your capital is at risk.
Yep.
So the industry always says one thing: past performance
doesn't guarantee future
returns. And it's important to know that because I think as well as having the potential to go up in value,
it's also got the potential
to go down. So that's the main thing that you have to understand when you're essentially becoming an investor. If someone wants to start now, how do they basically go about the selection process?
So it's coming down to from what our topic was before about getting onto the stock market. The first point of view protocol be to look for a broker.
Okay.
And the thing is, as I mentioned earlier, because the capital base is so much smaller for a mutual fund, you've got a great head start because you don't have to have so much capital.
I know you can start with as little as £10.
Yes. Yeah. So what you need to do, like on our topic about getting on the stock market, research your broker because there are many different brokers out there. And once you've also reached that broker, research the mutual fund in question as well. As I said, there's different variables you need to take into account when choosing the fund you wish to then invest in.
I know, for example, for me personally, I use a broker called Hargreaves Lansdown just because they have such a massive range. Yeah. It's like going to Tesco's and just having so many options.
Yeah.
But also, what they do is they prepare a list of like top performing funds or the ones to look out for. They, all these kind of things. So it's almost like a great starting point. But a lot of them brokers do this whereby they might have the top picks.
Correct.
Or they have a selection that, okay, these are the ones that are doing well in this particular sector. Because what people need to also remember is that these funds, apart from having specific strategies, also focus on different markets. So some will only invest in the UK, and within the UK market, they might only invest in companies.
So like the car industry, for example, they you do get specialised funds.
Well.
So and it depends. So you might actually, and that might be a starting point for yourself because you've got a interest in a particular area. You choose a fund based on that. So there are many different types of funds out there that you can choose from.
And I know there's some that offer ethical investing, so they won't they won't touch tobacco companies,
Correct.
for instance, or alcohol companies.
Yep, that's correct.
So there's a lot of range available. The next thing I wanted to move on to is the fact that these mutual funds, you can hold them within what is called an ISA.
Correct.
So an ISA stands for individual savings account.
Yeah.
And every year, everybody over the age of 18 gets an ISA allowance from the government. That runs from tax year to tax year. So 6th of April 1 year
to the 5th of April
next year.
Sure.
Currently, that allowance is £20,000.
For the stocks and shares ISA.
For the stocks and shares ISA. Well, you can split that
again between
across all the different types of ISAs. So there's stocks and shares ISAs.
Yep.
There's cash ISAs. There's also something relatively new called innovative finance, which allows you to invest in sort of like startups and all that kind of stuff, Kickstarter, sort of ventures. And there's also the Help to Buy ISA, for example. But explain some of the benefits of ISAs.
So where the benefits of the ISA is that it's tax-free.
Okay.
So meaning in terms of you within that pot of money that you've got, you don't get taxed on it.
So if you make interest on the income,
correct,
it doesn't get taxed.
Correct, as long as it's within gains, as long as it's within that pool, so that £20,000 pool, you don't then have to pay the government tax on that.
Okay. I guess the logic behind that is because that investment you're making, the money you've used to make that investment has already been taxed because it's coming after tax has been deducted from your salary.
That's correct.
So
and also in terms of a lot of when you go through brokers, in terms of they work out taxes for you as well. Okay. So in terms of capital gains and stuff like that, that can already be worked out for you by the broker.
Okay, fantastic. So for me, that's always a great starting point. Always use your ISA allowance because this is basically an ability to invest tax-free.
Yeah, that's correct.
Don't waste it. So, you don't have to have a king's sort of inheritance or a king's...
I say you can have a low starting point.
Yeah.
You can start... Obviously, then it will take time, but at least it's a starting point.
Yeah. The only thing about the ISA allowance is that you use it or lose it.
Correct. So
it doesn't roll
each year it doesn't roll over. So each year, if you've not used your allocated investment or allowance, then the next year you just get a new allowance. It doesn't roll over.
Anyway. So just starting off, you can invest on a monthly plan. So you can just set up a direct debit, little as £10. Some of these funds will accept, or you can just invest a lump sum. £200, £500, £1,000, whatever you have, but it's just important to just start, and then you can start to see what kind of returns you're making, especially because, like we keep mentioning in our episodes, inflation is going up.
Yes.
So if your money is just sitting in the bank account,
you're technically, in real terms, you're losing money.
Because your money, the value of your money is going down, meaning you can't buy as much stuff
with that same amount of money.
So cool. So that's mutual funds. That's just a quick insight into mutual funds. Is there anything else that you want to add to that?
No, that's it. That's just a quick roundup that we wanted to give viewers. We had a few questions when we done our introduction of getting onto the stock market, and that's another example, another financial product out there if you want to begin and start investing. Yeah,
we'll drop the links on the online platform to a list of approved brokers that the London Stock Exchange provides. Yeah. And if you have any other questions, just get in touch, let us know, and we'll be happy to address them.
Yeah, keep in touch, guys.